going on, guys? Back with another video. Today I just want to be making a video on backtesting, basically just going over, try to do it slowly, but kind of how I enter every day, trading days, how I trade. I'll try to be explaining everything I'm looking for in terms of fair value gaps, SMTs, when I'm entering, where I target, stuff like that. So hopefully this should give you an idea of pretty much like how to actually trade the Mech model and the continuation model. But to start out, if you do want to do backtesting, uh, which I highly recommend, you should use this site, FX Replay, which I'm on right now. All you have to do is just sign in. I have the free version, so anyone can do what I'm doing right now. Have the free version, right? Just logged in, and bottom right, you're gonna hit new session, and we'll just call it backtesting, if I can spell. And you can start out with however much, but I have 50k accounts for all my prop firm accounts, so I'll just do 50k. Assets, they only give you like the free version ones, so NAS 100, but that's completely fine. And then just do SMP. If you pay for this on FX Replay, you could get like the actual NASDAQ and the actual S&P, but I don't think that's really mandatory or needed. Chart layout, it's going to be blank for you if it's your first time. If you've done, obviously, a backtesting through this, like you could just drop down the menu and do the last used, and I'll go into that in a bit. And a starting date doesn't really matter. I think I'll just go like April, because I haven't done April yet. Start of April, and then just make your time 9:30. Could I just type this in? Oh, no. Okay, 9:30. End date, you can just do auto update end date and create session. And then you're going to see, this is pretty much how my chart layout is on TradingView, because it uses TradingView. If this is your first time, it's going to be different. All you really have to do is like in TradingView, go to your chart settings in the top right, and just go through all that, make sure your chart settings are good. You could add stuff to your hotbar like I have up here. But basically, the way it works is this top bar is going to be your skipping, or like how to play each candle. This drop down menu will be how much time skips between each candle. So right now it's on 1 minute. And when I hit this button, it will just skip 1 minute of a candle, right? Down here is where you're going to buy and sell, the bottom left. And I'll go into like how I'm actually calculating that. And then obviously bottom right will be your P&L and stuff like that. And you could also hide it if you don't want to even see it, but that's your choice. I don't know what this says. Oh, I've never seen that before. Okay, but anyway, let us get into it. So first thing I'm always doing is looking at the 4-hour chart and seeing what are we doing. We created this new week opening gap, right? However, we're extremely bearish. I mean, we just look like it's been a downward trend since, the last week of Wednesday. Just been really moving downward. 4-hour gap up here, which I will mark out just with a line. I'm gonna go to the 1 hour now. Let's see. Kind of same thing. Now, this is where I'm going to go to the S&P and identify if we actually are going to continue bearish or not. If I see any like SMTs that stand out. It's kind of hard when you're flipping back and forth, but ideally, you kind of just want to see if anything stands out, which we aren't seeing right now. Okay, sorry. From what I was saying, look for obvious SMTs. I also forgot to mention that to switch between the two assets, you just have to click on this top and then go back and forth. Now, if you have two monitors, you could actually like open up a second tab, FX Replay, just go to chart and pull up the S&P 500 and then pull it up on your second chart and look at it like side to side. But for the simplicity of this video, I'm just going to assume everyone has one monitor, so we're just going to be doing it like this. But again, like I said, the only thing I want to see is maybe this low getting swept to see if we could fill the gap, but that is not the case. So no clear SMT on the 1 hour, perfectly fine. I'll keep that 4 hour gap right there. Is there any 1 hour gap? No 1 hour gap is closer. We might just fill this. I mean, bias wise, I think we just fill this gap and keep dumping, or get back to the 4 hour and keep dumping. And again, why do I think that? Because we've just been kind of on this downward trend for a while, and I don't see any reason for us to just explode up. But 30-minute, also checking for gaps, SMTs. Doesn't look like we have anything really that's like standing out, which again is fine. So 15-minute will be the last one I look at for like external stuff. We can see we have a prominent 15-minute low right here. And the reason I say that is because this 15-minute low is resting in a 15-minute gap. So the reason I like this is just because new week opening gaps, these gaps that get created off the, off of a new week, they tend to be a really strong draw on liquidity, like to get completely filled, because there's just so much area that just price has not been in. So we want to see us reach the top of it. That's the only time you're really ever going to want to see reaching the full fair value gap. Usually when you use fair value gaps, you just want to see it like touch into it a little bit and then reject, stuff like that. But new week opening gaps are very different. But we could just go to the 5-minute chart now and start when market open. So every time I hit the skip button, it's just going to skip a minute. So you see the 5-minute candle is kind of just wicking around. We come down. I really want to see us. Okay, we create pretty much equal lows here. Or we literally do. I want to see a sweep. Okay, so we got a sweep off of this 15-minute low that we marked. And we also have the sweep on ES. We're going to see if we just get a reversal. Let's go to the 1 minute actually, just to see if we get anything crazy. That would not have inversed. No, well, okay. So the reason I went to the 1 minute is just because I wanted to see if we get a gap that inverses, which we do. So first thing I'm going to identify is that this gap right here, the 1 minute gap, just got inversed to the upside. Now I'm going to decide if I want to take this trade. So a couple of things I want to see. One, I want to see an external SMT. 15-minute gap. We could see that on NQ, we did not take out this 4 o'clock one. But I want to see on ES. Oh yeah, ES 4 o'clock. So ES did. So the way I like to identify if we have an external SMT, or even internal, is you want to look at NQ, and you want to say which is the furthest candle that we didn't inverse or didn't sweep the low of, and that would be this 4-minute or 4 hour, which is like really small. I mean, they're almost relative equal lows at this point. But we could see on ES we clearly swept it out. So that's starting. This also, we identified before that we wanted to see us sweep this 15-minute intermediate low in the gap and get a reaction off of it, which is exactly what we're doing. We have a 15-minute gap above, which is untapped, which is a clear target. And yeah, no other gaps. I mean, so let me get rid of. So I'm going to get rid of the 15-minute low and the 15-minute gap that we wanted to tap into and get a rejection out of. And that's exactly what we did. This gap that I have marked out is a 1-minute inverse. And this gap, let me get rid of the new week opening gap. And this gap up here is a 15-minute unfilled gap. Now, we said we were bearish on the day. However, we also identified that the new week opening gap is probably gonna want to probably get filled completely. And this rejection off of a key level and getting this beautiful momentum inverse is exactly what we want to see in order to get. Wow, that is 150 points away. Okay, we're not doing that. I can't believe how many points this is. But actually, you know what? Wow, this volume's crazy. But I digress. So there's a couple of things we want to see here. So now that we understand that this is where we're reversing off of. Oh, also, real quick, I'm not even going to explain that. Let's look at internal SMTs. The 944 candle is the lowest on NQ. The 944 candle is the lowest. Okay, that's fine. We don't necessarily need an internal SMT. It just helps a lot. But why do I like this trade? One, we have this unfilled 15-minute gap above. And we also are getting a nice rejection point like we talked about. We're rejecting off the 15-minute low, 15-minute gap, right? We have an external SMT, and we're getting great momentum through this 1-minute gap. This target, unfilled 15-minute gaps and 5-minute gaps, are great targets because price is going to want to come back into it. It's either going to want to come back into it and keep going up, or come back into it and reject and go lower. We have no other gaps in the way. We have no 5-minute gaps that are in our way to this 15-minute gap, right? So we have no reason to reject price. We also, little keynote, we also have some nice LRLR. LRLR is basically low resistance liquidity, so we create these highs, right? We keep creating these little highs that aren't getting taken out by any moves, right? So we have a little high here, little equal highs here, a high here. But it's just all resting liquidity and resting stops that haven't been taken out yet, and the market's going to want to take it out. So now that we identified that this is a trade we want to take, how are we going to go about taking it, right? What are we going to target? So first thing you want to do is always do your stop losses first. Stop losses, they're going to depend on what your target is, but the first thing you want to do is either have your stop loss at the recent low, or you're going to have it just below the gap, right? Now, you could say you could keep it below the gap and go 1.5 RR, which is actually pretty good just because of how many points this is. It's still 95 points, which is like insane. But I really think keeping it just 1-to-1 is going to be your best option. So when in doubt, you're going to want to go 1-to-1, and the reason I'm going 1-to-1 here and not just at the low is just because we really just want to see us hit this 15-minute gap, and that's it. So targets are going to be 15-minute gaps, 5-minute gaps, and then just any kind of internal highs and lows, right? Let's go to ES actually real quick. Actually, we can talk about that later, but this is prime taking for setup. Now, how do we actually do the math for how much contracts we want to do? First things first, you're going to see how many points and how much you want to risk. So if I'm risking $350, we know that on NQ, every point is $2. So if every point is $2, that basically means if we're risking $350, we have to divide by 2, which would mean at like the, what's it called? If we were 20 points away, actually that's a bad example. But basically the math, it's kind of hard to explain, but the math is pretty much what you want to risk divided by 2, always, because NQ is $2 per point, divided by how many points you're trying to, your stop loss is. How many points is your stop loss? So we say 149, so I'll do 149, and it gives me 1.17, blah, blah, blah. You could just round down or round up. Just know that rounding down will give you less than 350, and rounding up will give you more than 350. For whatever reason, on backtesting, each point, like each time you move, or like I said, it's $2 per point. For this, for some reason on this chart, it's $1 per point. So when you're actually trading New York AM, NQ, you will always be doing your total you want to risk divided by 2 divided by your stop loss points. However, for this chart only, when you're backtesting, you don't need the divide by 2 because you need to multiply it by 2, which obviously just counteracts the divide by 2. But keep this in mind when you're actually trading, and then when you're backtesting, just get rid of this, right? So we have 2.3, we're just going to go 2. So now we want to buy, so we're going to hit buy. And your take profit, stop loss is going to show up on the right with the active P&L, and then you just drag it up, and it'll show you, right? Drag it to here, and then we're going to choose a break-even point. So these equal highs are a really good target, and this is actually going to be my break-even point because it's the most, it's one, probably the most likely point to reject where we get close to take profit, and if we ever end up here and come back, I would just want to go break-even anyway. So we're just going to skip through. Yep, so now we instantly get to break-even, so now you can just drag your stop loss up like this, and then we'll see, and boom, instantly hit TP. This is a very textbook trade. I would make sure if it doesn't make sense, just go back to each part that I explained as to why I took this trade. But there you go. That's 1 for 1. How much time? Wow, that was 20 minutes. Jeez. I'll try to go a little quicker on these next ones. But the way you skip with this is you're just going to go to the 4-hour. And on your keyboard, if you hit Control and Space, or you just hit this, it'll skip automatically. So now we're at 12 o'clock, 16 o'clock, 20 o'clock, 24, 4 o'clock on Tuesday, 8 o'clock on Tuesday, right? Once you get to 8 o'clock, you want to stop. Go to 30 minutes, and then just hit it 3 times, so you're at 8:30, 9, 9:30. And you could set yourself up there for the next day. So again, we're going to do the exact same thing. 4-hour chart, what are we looking at? What are we seeing? Clearly, we're seeing bullish moves. You actually had a nice respect of this high, which is actually kind of crazy. So 4-hour high would be our target. We're clearly moving bullishly. We have a 4-hour gap down here. We're going to go to the 1-hour chart now. 1-hour chart, what are we doing? We create hourly gaps going up, and we're respecting them. Hourly gap down here that we respected. Hourly gap right here. Little one that we respected. Right? And we actually just created a 1-hour gap here. Pretty nifty. So, next thing, let's check for SMTs. We still... I'm not seeing anything too prominent in terms of SMTs. Nothing that's like jumping out. Right? The only thing that really jumps out is ES is like literally about to hit this high. So, we just got to be careful of that. Oh. But other than that, we don't really have too many clear SMTs. We'll go to 30-minute. Pretty much telling the same story. That we're probably going to want to take out this high. Right? And when you see this, there's a couple of things. We see that this is a very prominent high, because again, what makes things prominent highs and lows? When they're resting inside of gaps, and it's a clear high or low. What's going to probably happen is ES is probably going to hit this before NQ, creating an SMT off of open, and we might get a reversal right away. And this 1-hour unfilled gap would be a great target to target off of that SMT reverse. You could also see we have 15 minutes in the way as well, so we could also target this 15-minute depending on the moves. But I digress. If we don't reverse off of this, I'm bullish. If we reverse off of it, I will take a short. But we'll see, obviously, what happens off open. Oh, and make sure you turn this back to 1 minute before you hit skip at 9:30, because I've done that sometimes, and it's bad. But actually, I think I want to... No, I don't want to keep it on. I'll keep it on NQ. And see what we do. Okay, so we tap into the 15-minute gap, right? 15-minute gap that we marked out. ES clearly taps into it as well. This could be a great continuation. So, Again, what are we looking for in continuations? We clearly have a bullish bias coming into the day. And we know that this prominent high could be a reversal point, but it's also an external liquidity and a great draw on liquidity. So, what does that mean? We know that we want to go there, but how are we actually going to get there? Well, we can get there by getting pullbacks into 5-minute and 15-minute gaps. Also 30-minute gaps and hourly gaps, but mostly 5 and 15. Pullbacks into it, tap into it, and then continue going higher. So, we pulled into this 15-minute. Now we're going to say, okay, is there going to be a setup that we could get off of it? So, skip a few candles. We're just really chopping around. Let's see if we had no 3-minute, no 5-minute. Okay, so we really only have a 1-minute here that gets inversed. I really don't like the momentum out of it. Now, let's look at ES and see what we're seeing. ES gets a very prominent candle to come back up. Let's see. This did not take out the 908 low. And Q, where's the 908? 909, 908. Okay, so we have a clear SMT if I could find it. So the 909 candle got swept out on ES, as you can see here. But on NQ, we did not. This 909 candle is down here. We definitely did not take it out. So again, we're hitting a 15-minute gap. SMT, clear drawn liquidity is up here. So now that I know I like this trade, and I want to take this trade, even though the momentum was low-key ass, I still like this just in terms of where we want to go. So now it's how are we actually going to, what trade are we going to take to get there? Well, like we identified before, this is actually great LRLR, because these are just highs that literally did not take out each other, like 1, 2, 3. Great target as well. But a lot of the times, I'm just trading 1-to-1. So I really like putting my stop at the low. This looks like to be a protected low because we're bouncing off of the gap. I can see us manipulating back down a little bit just to keep going higher. So that's why I don't want to put it underneath the gap. And another reason that allows me to put my stop loss here is because my target, 71 points, is right above this high, which is fine. I'm fine with that. Because my break-even point would probably be that first high. So again, why do we like this trade? We have a bullish bias, clearly bouncing off a 15-minute gap, while also getting an SMT on the 1-minute chart, right? SMT. Great reaction. We're getting a reaction out of it with an IFVG. We have a drawn liquidity externally, but we also have an internal drawn liquidity, which is where we're going to be trading to. That's where we want to hit. So again, how are we actually going to do this? We're going to do 350 divided by, what did I say, 71? 72? Whatever. 4.86, I'll just say 5. Right? Again, if you were on NQ, if you were actually trading during the daytime, you do divide by 2. This would be your real contracts, but for this, you just do it like that. Hit buy, TP at the high, or not the high, just a little bit above, because I want my stop loss at the low. It should pretty much equal the same, but, and then we're going to see, skip, there we go. Another A+ setup, clear setup. I'm trying to think, like, what questions could come from this. I mean, it's really identifying if we're rejecting off of levels, 15-minute gaps, 5-minute gaps with lows inside of them. With SMTs, it's like a perfect recipe for we're just going to continue the other direction. So like we pulled back into the 15-minute with an SMT, and then we get that inverse fair value gap to confirm that we're still going that way, and then we deliver higher. I actually forgot to even check for an internal SMT, but it doesn't look like we have one. Yeah, but that's fine. But there we go. 2 for 2. I can just hit this. And then we'll do the process all over again. Skip, Don't want to skip too far. Watch me have fucked that up. Nope. One more. And then we'll just skip 30-minute. 1, 2, 3. Perfect. 1 minute. Okay. So again, same thing over again. We'll go to the 4-hour chart. What is the 4-hour chart telling us? So, I mean, you can literally see we actually create equal highs here, and we just reversed off of it. And this is the point we marked out with, like, yesterday's trading. Create a 4-hour fair value gap on the way down, and now it looks like we're respecting it. So, we also inverse this 4-hour gap. So, clearly looking bearish to take out these lows, right? With, actually, I can't call that a high yet, but there should be a high on the 1 minute or 1 hour. Yeah, so then we have this 1-hour high in the gap as well. So it could be a nice price to just pull back into and come back down lower. Also mark out an untapped into 1 hour, but I don't think we're going to get price all the way up there. So now we're going to say, okay, let's go to S&P. Let's see. S&P actually took out the high. NQ. Okay, NQ made equal high, so we're not going to, I mean, that would count as SMT, but I'm not bearish for that reason, like, you know, exactly. I'm bearish for all the other reasons I said. The 16, where's the 16? 16 did not get taken out. 15, right? I said 16 did. Yeah, no SMTs there. Yeah, it's not looking like we have a clear SMT right now. Just go to 30-minute. Yeah, interesting. Okay, well, nothing too clear with SMTs, but we could see maybe if we hit into this, like, these highs, we could get one. But we'll see off open, obviously. Let's go to the 5-minute. And skip. So we really want to see us come back up into these levels and just keep pumping down. We'll see if that, okay. So we hit that level, and we have a SMT. So we could see the 3 o'clock candle did not hit it. It might hit it in the next minute, but for now, it did not. Oh wait, there's actually an SMT here. I didn't even realize. So we actually have an SMT with this. But that might get taken out with, let's see if we keep pumping. Yeah, we're just going to pump through it, right? I guess on S&P, yeah. Okay, so no SMT, but that's fine. The next thing to do, if we just see us pumping through levels, is identify where your next level is going to be. Which we marked out before is this 1-hour high. The 1-hour unfilled gap above. So let's just go to the 1 minute. We'll see if we get there. Oh, we're actually getting a reversal. Do we have... Am I open up this 3-minute? No. Oh, wow. Okay. 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 Trying to see here. We just inverse 2... Well, we have 3 1-minute for value gaps. Right? We just inverse this. Now, I gotta... Like, is this just a fake out move? Okay, so I need to talk about what I'm actually thinking right now. So, the first thing I'm thinking was, I wanted to see us hit these key levels and reverse, right? But, from what it looks like, well, we hit these levels and are reversing, but we don't have an external SMT. Unless we do here. 15. S&P 15. No, 15 left, like, equal highs pretty much. So, what makes this really tricky is that we don't have an external SMT. And we also have one more 1-minute gap that we would have to inverse through to take this trade. And we don't even have an internal SMT. So there's two. So like this is discretionary because I said what I wanted us to do. I wanted us to hit these highs, take them out, and then get a reaction or reverse off of it. But we just didn't. I really wanted to see us get an SMT off it because that would have made it so much better. But in terms of taking this trade, I don't think. But I said I was bearish on the day because this is like the problem. Like, how much do I really like this? You know? Oh, but we got. Oh, we actually tapped into this unfilled 1 hour. Okay, I take this back. I didn't mark this one unfilled 1 hour. We tap into it, right? ES does as well. I really think we should have an SMT somewhere, but like 15 with 14, 15. Oh, wait. Oh, no, that's the equal. This is low-key like a baby SMT. I mean, this is definitely higher than... I mean, it's very small. You can't really see the SMT. I mean, it almost looks like equal highs on ES, but ES always does that. Okay, so I'm actually going to take this trade. I mean, there's no point in rushing it either. I think I'm going to let this play out just because we don't have a clear external SMT, and even though we're bouncing off this 1 hour, like, very well, I kind of just want more confirmation, which is always fine. I don't want to teach you guys bad habits into, like, being like, if you're iffy about a trade, like, don't even, like, you don't have to take it, right? But we'll just see. Yeah, we just come back up. So we would have lost that trade. So that's why you always want to be like, I would just be cautious. So here, again, we retake high. S&P also does as well. Let me check for other gaps. Not seeing anything. 3-minute gap. You rejected off of it and came higher. I mean, for the same reasons. We just don't have a clear, like, external SMT anywhere that I like. You know, I would really need to see, like, this. I really want to see this unfilled get hit first. So again, I'm not going to take this 1 minute because there's no SMTs. So it's not, I think it's just a force. You know? Yeah, we're really just chopping. Chopping around. Let's see, what do we want to see here? I mean, we really just need to see a move go somewhere. But this might just be a no trade. Yeah, this is looking like a no trade day. When you see price going horizontal like this, it's just not. It's just gonna be a no trade day. This really looks pretty shitty. I mean, this isn't really hitting any key levels. So, oh, I mean, it tapped into an unfilled 15 down below. I mean, unless we got a rejection right now, but it's also at this timing, it's like what 10:50. So it's not even like something I'm like super excited to take, you know? 9:30 candle did not take out. Yeah, no. Okay, this would just turn into no trade day. Even if we got the rejection out of it on NQ. Yeah, we can see we got it late, but by then there's just no volume. So that's really good that we didn't take those two trades because we didn't have the external SMT. We had no internal SMT. We only bounced off of a gap, but you could see like price action throughout this day was just so horizontal. It wasn't good. So it's very good to identify when there'd be a no trade day. Alright, let's just do one more day because I'm starving and I need food. But let's see if we can catch one more dub. 1, 2, 3, 4 to 8 o'clock. And the 30-minute will just be 1, 2, 3. This definitely looks like a data wick. Right? Yeah. Okay, so the data wick high and low got taken, which is fine. But let's go to the 4-hour, like we always do. How long is this? 30 minutes. Okay, so I guess 4-hour doesn't like us anymore. Alright, can't do the 4-hour. Let's chill. Alright. Well, we made a crazy bullish run in the afternoon. Um, well, okay. Well, first, looks clearly bullish. Let's see. No real SMTs. I mean, we have this huge, like, just 1-hour gap that we've tapped into and came up, but then we inverse back down, and now we're kind of just dancing around. A prominent 1-hour high here because it's inside of a gap, and it's a swing high. Other than that, I would probably just say we're bullish. If we could take out these lows here, these look like equal lows. Pretty much equal lows. I'll move it down to this one. And then get some kind of reversal off of it. But we'll see. Nothing else is really popping out. I mean, we have no external SMT, right? So make sure to turn back this to the 1 minute. We'll see which way we go. I mean, we could come up and hit the 1-hour gap that I said, the 1-hour high, and come down, or we could come down into this and come back up. But we'll just see what the market gives us. So instantly, very crazy chop. Okay. Hit the low. Let's check ES. Of course, I didn't mark it out on ES because I'm a bot. ES took out both lows as well, so no SMT. But we could see how we're actually going to react off of this. 1 minute. Okay, so we inverse. I'm going to highly assume there's not 3 minute. Yeah. We inverse this 1 minute. So what I'm looking right now for is I would look for an internal SMT. Let's see. The 943 low. 943. What's the lowest on this? 943. No internal, no external SMT. Maybe I could find one because as long as I get the 30-minute. Whoa, why is this like so weird? Nah, I mean there's not going to be any real SMT. I mean, so there's no external SMT, no internal SMT. So by the looks from the day we just did with trading, we would just be like, okay, we're not going to take this, we're not going to risk it because we're not like too sure. However, there's a couple of things with this trade that I like way more than the last one. There's this concept which is AMD, accumulation, manipulation, and distributing or distribution. Which basically means when we accumulate like this, like where price is just sideways, we get a move in one direction, and then price will pump the other direction. So even though we have no external SMT or internal SMT, I like this trade a lot is because we're sweeping out a prominent low, which we've pointed out, right? Prominent low in that 1-hour gap. Off market open, we just manipulated. I'm sorry, we accumulated a lot, but then we manipulated into this key level that we wanted to see a rejection out of, and we're getting it, and we're getting clear rejection, clear bullish rejection. Now, what is our target? Well, we said before we had this 1-hour high, right, in the gap. That is a clear target. This is a clear target. A 1-hour swing high is a clear target. We also have one down here. But as we could see, if we're let's say we are going to take this trade. But if we put the stop down here, it's 109 points. And if we just went 1-to-1, 109 is right at this internal high, which is perfect. We also have some LRLR right here created. So in overall, even though there's no SMTs, just using like other knowledge with AMD. Uh, if you need a video on AMD, my boy JJ Futures, he made a video on the AMD like concept. It's not so much a model. I mean, people trade the model AMD, but it's so good to understand what it is because it doesn't have to be its own model. It could just be a concept that you understand so that when you're taking trades like this, where it is our model, it is hitting a 1 hour low, right? We are hitting a 1 hour low inside of a 1 hour gap, and we're getting rejection out of it, and we're getting this 1 minute fair value gap inverse. Um, but you could say, but the reason I want to take it compared to yesterday's trade with the backtesting, the reason I'm taking this is because our next confluence is this accumulating, manipulating, and now we're going to distribute, and we would want to distribute higher. We also have some LRLR. So that's the difference between the two trades, even though they both don't have SMTs. So if you don't really understand that, that's fine for like beginners. You could just stick to having an external SMT, and you don't have to take this trade. But it's good to understand, that even though two things might seem alike, where they both don't have SMTs, one is actually drastically different than the other. But let's see. So 3.2, we'll just do 3. We're going to buy, right? Put the TP up here, put our stop loss down here, and our break-even point will be this high right here. Let's see. And we actually reverse, and we lose. So, again, I mean, you could say the external SMT not being there could have been the reason why we lost that. I think that's a trade that I take 10 out of 10 times. And I'm actually glad we actually got a loss in this, so people aren't like... Or it's clear that this, obviously, you're not going to get a 100% win rate with any model. But this trade, is an A model. I mean, it's an A trade. I mean, you can see price action kind of just... It literally does nothing all day. This actually might... Is this the 10th of April? I mean, with Tuesdays and yesterdays, like, this is really bad price action. Really bad price action is just going horizontal. This setup is very clean. I mean, you even saw we had great momentum going up, and then we just reversed off at nothing. So, I'm glad that was in there, because it could show you that with bad price action, the model isn't always going to work. But that's why it's a 70% win rate. It's not 30% of the time you're going to have to lose. But you can see we had 2 wins and 1 loss. You're still up +1. Still another day in the week. I'm not going to do that today. But I think it's good to show that it was good to show 2 winning days, a day where we didn't take a trade, and then a day where we did take a trade and lose. But any questions, just leave it in the comments. I'll respond to everything. And yeah.